We're glad to have you back. The Minister of Power, that's in Nigeria, Mr. Adebayo Adelabu, says a meeting has been scheduled between the President, that's President Bola Tinubu, and the leadership of power generation companies in Nigeria over a 4 trillion naira debt. Special Advisor, Strategic Communications and Media Relations to the Minister of Power, Mr. Bola Tunji, disclosed this in a statement made available to media men in Abuja. According to the minister, the planned meeting with the President aims to chart a course for resolving the debt issues. Mr. Adelabu assured that the federal government would immediately pay a significant portion of the debt, while the balance will be settled using financial instruments such as promissory notes. The minister urged GenCos to partner with government in raising public awareness on the usage of electricity. Dr. Chinan Dikwal, he is the Vice Chair, Africa Energy Council. He joins me live for this conversation from Doha. Thank you so much. Good afternoon. It's good to see you today.
Good afternoon, Tolu. Pleasure to be here.
Yeah, let's start with electricity. Yes, you know what we face here. Between 4,000 and 4,500 megawatts is what we generate as a country. Well, that's no news. But the issues around the GenCo guys, the generation guys, these are the big boys in the industry, the gas guys, the GenCo guys, and all of that. 4 trillion naira is a lot of money. How did we get here? And how do we make sure, despite the increases in tariff, that we're still having all of this shortfall one way or the other?
Thanks for that, Tolu. So just for context, 4 trillion naira is what's owed these generating companies. And again, 4 trillion naira just by the federal government. So this is just the debt by the federal government, not to think about private organizations or other things.
Yeah,
it's a huge amount of money. And if I break that down, it is 2 billion just in 2024, and then 1.5 of other legacy debt that comes from previous years. So think about this. If you're running a business and you're owed that amount of money, the first challenge you're going to have is that of liquidity. You will not have the cash flow for you to run your business day to day. And unfortunately, for such a critical infrastructure like we have for power, what that means ultimately is when the grid is down and we need to do maintenance and servicing and upgrades, the money will not be there. So many of these GenCos, with all due respect, are borderline insolvent, which is really, really a shame. Many of them are borderline insolvent because their revenue projections, their cash flows that come in, the revenue is meant to come in, has been encumbered and has been held. The payment cycle is way too long with the federal government, and many of them are unable to operate in a very effective way. So this is a huge deal, this is a huge situation, but I've got to say, there are a couple of things here to bear in mind. The first thing is the federal government, so the meeting has been scheduled for the president to speak to them. I think that's a great first step. But bear in mind, even this, the discussion that will be had has been said that the first step is, a huge payout, a cash payout, and then the remainder of that will come through promissory notes, maybe 6 months down the line and all of that. That's nice and good. But the reality of it is it needs to go beyond that. We need to clear that debt out, completely, because this is critical infrastructure that much of our GDP depends on, that much of the population depend on. Like you said, there 4,000 megawatts is what we are currently, distributing today in Nigeria. So we need to move quick. We need to be swift and make sure we do it immediately.
But electricity remains a challenge in this part of the world. Just like I said before I asked my first question, what sort of efforts now do we need? We just heard about the electricity master plan now being reviewed again, government adopting some of all of these policies. What are the quick wins for us in this part of the world?
Tolu, that's a great question. The biggest win right now, the quickest win, is to settle this debt and allow these companies to go back into solvency. The moment they go back into solvency and have cash flows and liquidity, they will immediately take care of the most pressing maintenance issues that are affecting the grid and all of that. Now, that's very short term. Of course, when we provide that money, it gives them the short-term cushion. What needs to be done in the medium to long term, when I say medium term, maybe a year to 3 years going forward, is putting down those structural reforms that we talked about. And one of the big ones, you mentioned it, of course, the electricity reform that's just been announced last week. But one of the big ones is the full liberalization of the market. a bit like what we've seen in the downstream sector, where subsidy was taken out completely and the market was allowed, full market forces were allowed to come in. Scarcity has now gone away. Full market forces are at play right now, and it's a much better market, a lot more expensive for sure, but certainly access has been sorted out. So we need to think about full liberalization. I know that's not something that we can do immediately, and some sort of subsidy regime needs to still be there to take care of people who are struggling. No question about that. But I think for electricity to work, we need to start to invite the private sector to come and make those investments in a fully liberalized market, to allow those dollars to come in and allow for new upgrades onto a lot of the generating infrastructure, transmission infrastructure, and also distribution infrastructure.
You talked about liberalizing before I go to my next question. The fear of Nigerians would be, if that happens, already we are on bands, band A, band B, band C, band D, and some of us on band A, even as much as we enjoy the supply, sometimes the issues of high electricity bills is also on the other side. So when you liberalize the sector, do you think that we'll be able to manage the rates, the bills that will come from the distribution companies? They have always argued that they want a cost-reflective tariff. I don't know when they will get that cost-reflective tariff. Is it until we pay 1,000 naira per kilowatt hour? I don't know what's going to happen at that point.
Yeah, so that's a great question. That's a great question. So if we look at it purely from a retail standpoint, or if you look at it purely from a wholesale standpoint, like you're mentioning there, there's no question in my mind that we've seen it around the world, there are several models that can be deployed, band A, band B, band C, in terms of pricing, to make sure that your largest population who are struggling still have a bit of a cushion. And I'm going to be very clear here. I'm not advocating entirely, because we're talking electricity here. Electricity is just as primary as healthcare. It's just as primary as anything you have in any economy. It's very primary. So I'm not at all advocating that we take off all sorts of cushions or subsidies. That's not the point. I am making the point that we need to tier it in such a way that the critical infrastructure that we have in the country is taken care of, and that investment does not dry. But also that within society, the most vulnerable are taken care of. And there are several models that have been deployed across several countries that we can bring to the fray to make sure that that happens. But without a doubt, you're right. If you're in band A, the reality of it is that you might have to pay a bit more compared to other people. But even that cost structure itself, we know it's a bit, I want to say relatively fair, because much of the people in band A have a much deeper affordability. This is what we've seen quite generally. But I think the answer, of course, remains with the Minister, Adelabu, to see how he would play that.
Let's go to the oil market now and see what's playing out with the crude oil prices that has been dwindling. That there's a back and forth with regards to that. I'm particularly worried for my country. Because I know that our budget is predicated on about $75 per barrel, and as of today, it's fluctuating. We've seen what's happening with a bit of dip, and sometimes there's this, it comes back again, but not as expected, as stable as we expect. OPEC is also looking for a way to increase production, I think, output, I beg your pardon. So if all of this happens, what will happen to the price of crude? What's happening in that market? Explain to us the politics in that market at this very time.
So I'm going to try to explain this very simply so people can follow and understand it. Today, the price of Brent is about $61 per barrel. The price of WTI, which comes from the US, is about $58 per barrel. But every year when we do our budget, because Nigeria is an oil production state, and a huge amount of our money comes from oil proceeds, we'll do a budget which has a forecast oil price. Meaning, we'll do a budget and say we're going to spend X billion or X trillion naira every year, and that money is going to come from oil, and we expect the price of oil to be X. Now, that X in 2025 was $75 per barrel. I know for a fact that President Bola Ahmed Tinubu, in the initial budget, was based on $70 per barrel. It was sent to the National Assembly, and they, I don't know, in their, whatever calculations they came up with, it came back with $75 per barrel, the forecast. Now, The reality of it is, it's a very high oil price by any standard. Like I said, today we're $61 per barrel. So there's a massive shortfall. There's about a $14 deficit already. And we're only 3 months into the year, 4 months into a year, as it were. And our budget is already sinking. So if you just look at this principally from the, from a price standpoint, we have $14 barrel, $14 a price that we need to make up, which already is a problem for the budget. Now, the budget is also based on volumes of oil that we sell. In the budget for 2025, the volume of oil we said we're going to sell was about 2 million barrels per day. Today in Nigeria, we only produce, and I'll be generous with this number, I'll call it 1.8 million barrels. But when I say 1.8, it's a number that includes both crude oil sales and condensate. Normally, if you speak to OPEC, they'll tell you we produce 1.4 million barrels per day. Okay, but if you put the condensate number in Nigeria, let's call it 1.8. Okay, so again, even from a volume standpoint, there's a bit of a shortfall. So there's a problem there. From a price standpoint, we're subperforming. From a volume standpoint, we're subperforming. We have a massive budget that we need to finance for this year. All of government depends on running that. We're just talking about power right now. All the money to fix, the power outages and all of that all comes from that. But here we have a budget that's subperforming. So there's a huge risk there. And I think it's a question they asked me to. There's a huge risk there that we may not be able to implement the budget this year. Government might need to rethink about a supplementary budget, I think, in not too long, to make sure that that is functional and it runs. And there's a huge situation here because, much of the country depends on this. If we do not move very quickly, and like you mentioned there, actually, Tolu, it's not just the fact that oil is $60 per barrel today. Unfortunately, there's a huge potential for a downside. What I mean by that is price could come down even further. So OPEC has just given the signal. In the month of June, they're going to put about 411,000 barrels of crude oil a day on the already, on the already high supply of oil in the world. And you know that when supply goes up and demand stays constant, price will drop. So unfortunately, there is a potential that we could go even further than $61 per barrel for Brent, as it were. So I think all of these risks are there. And if we're not careful, we may not be able to implement the budget this year. If we don't do that, your guess is as good as mine.
How do we enhance operational efficiency in Nigeria's oil and gas industry? I know that at the time, production cost has always been on the high side. How can we enhance it, considering the fact that we have a new leadership at the NNPCL? What are your thoughts? Task ahead.
So that's a great question. I think that's a really good question. And it's one that gives us a lot more confidence. There's no question that we've seen the A team of the oil and gas industry disappointed. It's the first time, I've got to say, that industry stalwarts like myself are showing and demonstrating a huge amount of confidence, a vote of confidence on the operations today. So we've just seen really, really experienced people appointed. Bayo Ojulari is a veteran in terms of the oil and gas industry, an ex-Shell alumni. He knows the assets, he knows them really well. Okay, he knows all the assets really well, both the ones onshore, the ones offshore, the JVs and the PSCs. He knows them really well. And again, the same, the chairman who has just been appointed as well, Kida, is an experienced person from Total, understands all the Total assets really, really well. I mean, you can name them. Austin Navuru, name all of the guys on there as super experienced. So I think one of the things that's very exciting here is this. President Bola Ahmed Tinubu has given them a very clear mandate. We want oil production to be above 2 million barrels per day by the close of this year. That's a huge mandate. We have not seen 2 million barrels per day production in a long time, in over 10 years, probably 15 years, that we haven't seen 2 million barrels of oil production here. So it's a very tall order, but it's an order that I think when I look at the team and I see the amount of experience, I'm very confident that they can respond and really make that happen. Now, to your other point there, it's not just about production. Production is only one part of the picture. Anybody who runs a business knows that you cannot rely on sales because sales depends on the market and you don't have control of the market. We don't have control of the oil price. That's what we're talking about. One thing you have control of as a CEO, as a country, the only lever you have control of is cost, production cost. And unfortunately, that is where Nigeria has failed consistently. We've consistently failed in that regard. Our cost per barrel of production is one of the highest in the world, with all due respect, even higher than Angola. In fact, depends who you talk to. Many people quote a number around $50 per barrel. Believe it or not, many people quote that number. So if we're talking about oil at $61 per barrel and our cost is 50, you only have about $11 per barrel that you can play around with there as money that we can use. So the point here is there are several numbers that people throw around. Some say 30, but it all depends where you are. But the reality of it here is this. The very first thing, again, that President Bola Tinubu has done is he has made it super clear to NNPCL that they have to reduce the cost of production. Our cost per barrel needs to come down. It needs to come down relative to our peers. You take many of our peers around, we are the ones who artificially. So what I mean by that is, if you think about the Niger Delta, if we take the Niger Delta, if you go onshore, if you drill a well onshore Niger Delta, you're probably talking about 3,500 3,500 meters down, so 3.5 kilometers. Okay, 3.5 kilometers down. You go to Angola, probably about the same. But a well cost, the cost of a well in Nigeria is probably 50% higher than the equivalent elsewhere around the world. A country that deals 3.5K down compared to another country, we're about 40-50% up in terms of cost. Why is that the case? It's because there are a lot of artificial costs in Nigeria that are being put on there, unfortunately. And one of the commissions here for NNPC is to look at that, look at the cost stack, the entire cost stack, and make sure we optimize it effectively, take our cost of production, towards, I'll say, onshore, for the sake of argument. If we can take our cost of production, sort of around the $10 per barrel back, that would be incredible. Offshore, if we can drive that cost down to about $30 per barrel, that would be absolutely fantastic.
What is the outlook for the entire industry? Let's not forget what is happening in the United States. What is the outlook for the oil market, in your thoughts, Dr. Dikwal?
So, if I'm to answer that question, I'll default to a lot of the investment houses. So Goldman Sachs just revised their outlook for the year.
Yeah.
So they had, I think, a forecast of about $68 per barrel. It's gone down to about 63, I think, so $1 per barrel. They took off $5 per barrel. And all of it is down to what we're seeing right now. Drill, baby drill is taking fault. OPEC is also putting additional barrels on the market. So if you think about where we are, there has been a huge demand destruction just because of Donald Trump's tariffs. Donald Trump's tariffs have destroyed huge amounts of demand. Okay, supply has relatively been up all this time, especially because of the wars we're seeing in Gaza, the war in Ukraine. So supply has been steady, but demand has been destroyed. So hence prices come down. But I think, given what the US is doing right now, additional barrels are going to come onto the market. It will put more pressure on price. We expect that to come down in a very short term. And I don't see how demand would recover, even if you take off the tariffs. I don't see how it would recover very aggressively. So I think for this year, there's a very high risk that we'll close the year, this year, with oil possibly around the $64 per barrel mark. I think that's probably the best case scenario. I'll be very surprised if we overperform that number. I think there's a huge downside risk, but I would say around $63 per barrel is probably where we'll close the year for this year. And of course, that's not that's not good news for Nigeria. Our budget is based on $75 per barrel, so that means already, the budget is sinking.
Interesting chat as always with you, Dr. Chinan Dikwal. Thank you so much, Vice Chairman, African Energy Council. Do enjoy the rest of your day. See you again soon on the show.
Thank you.
All right, great conversation. And